Fidelity offering Bitcoin investing option in 401k accounts. More workers may soon be able to stake some of their 401k retirement savings to Bitcoin as cryptocurrencies crack even deeper into the mainstream. Retirement giant Fidelity said Tuesday that has launched a way for workers to put some of their 401k savings and contributions directly in Bitcoin, potentially up to 20%, all from the account's main menu on investment options. Fidelity said it's the first in the industry to allow such investments without having to go through a separate brokerage window and has already signed up one employer that will add the offering to its plan later this year. Fidelity's offering may be one of just a few for a while, given the substantial concerns about the riskiness of cryptocurrencies. The U.S. government last month warned the retirement industry to exercise extreme care when doing something like this, highlighting how inexperienced investors may not appreciate just how volatile cryptocurrencies can be, among other concerns. Bitcoin had 5 days in the last year where it plunged by at least 10%, and the stocks in the S&P 500 meanwhile had only two such drops in the last 50 years. Beyond this volatility, there's still fundamental disagreement about how much a Bitcoin is worth or even if it's worth anything at all. Proponents say cryptocurrencies can boost returns in a well-diversified portfolio without adding too much risk. That's because cryptocurrencies haven't always moved in the same direction as stocks and other investments, though they often have in recent months amid worries about rising interest rates. Some investors may believe in all those pros of Bitcoin, but still prefer not having to open a new account to buy Bitcoin, learn the intricacies of how to store them, or deal with taxes on gains made in the years running up to retirement. Or they may come around to that belief soon, and Fidelity wanted to be ready for them, said Dave Gray, Fidelity Investment Head of Workplace Retirement Offerings and Platforms. We have been developing this, anticipating some of the workforce trends that we see coming, Gray said. Our clients expect us to be ahead in developing innovative solutions. A big part of the thrill of crypto for some traders is just how volatile it can be. Not only did Bitcoin quadruple over 2020, but traders can buy and sell at 24 hours per day. A regular day for stocks on Wall Street, meanwhile, lasts just 6.5 hours. But the new Fidelity account won't offer that. It will update its price once per day, similar to traditional mutual funds. The account will also come with fees, which can range from 0.75% to 0.90% of assets. That means between $7.50 and $9 of each $1,000 invested in the Bitcoin account would go toward paying expenses every year. That's less than some specialty investments, but more than vanilla stock index funds, which can be virtually free. Others in the industry are also working to offer similar products. At For Us All, a 401k provider, the company announced a product in June 21 to allow workers to put some of their 401k in cryptocurrencies by sending it to a self-directed window. So CEO Jeff Schlutt said the company spoke with the Labor Department through 2021 about mirroring crypto and 401k accounts. Even after Labor's stern warning last month, Schlutt said he still expects the product to launch this quarter. For Us All plans to require savers to take an interactive quiz about the risk of cryptocurrencies before buying them, among other moves to educate investors. Protecting investors is paramount, he said. We believe our solution meets all the fiduciary standards under ERISA, the federal law that oversees retirement plans. Fidelity also places what Gray calls digital speed bumps in front of investors, forcing them to slow down and study the risks and rewards of crypto. Now, it may take a while for most employers to start offering something like this. The Plan Sponsor Council of America recently asked its members if the Labor Department's warning changed their minds at all in terms of considering crypto. The majority, 57%, said that they would never consider a crypto as a viable investment option regardless. Another third said the warning simply affirms the concern we already had. Now let's see if there's anything under crypto from the New York Post. Former AAF NFL investor pleads guilty to $600 million crypto scheme. Not really. Crypto exchange Binance removes Twitter emoji that resembles a swastika. Long Island mansion has How I lost 650,000 crypto in seconds. Hmm. No, I think that's pretty much it for this episode.